shares of data analytics company Palantir Technologies experienced a spirited rise of roughly 4.3% during the early hours of trading after Wedbush analyst Dan Ives voiced tremendous confidence in the company's long-term trajectory. He urged investors to triple down on their conviction in the stock, which immediately injected a jolt of enthusiasm into the market. As the morning progressed, that initial burst of momentum eased slightly, and the shares eventually settled at $172.02, marking a still noteworthy increase of 2.8% compared to the previous close. Even this moderated uptick signaled that the market was paying close attention to the analyst's remarks, particularly given the stock's reputation for dramatic intraday movement. Ives expressed the view that Palantir Technologies could reach a valuation of $1 trillion within the next 2 to 3 years. He based this bold outlook on what he sees as Palantir Technologies' exclusive and increasingly fortified position within the rapidly emerging enterprise artificial intelligence sector. This perspective arrived at a crucial time for investors because the stock had just endured a difficult stretch over the past month, dropping by about 20% as concerns swirled around inflated artificial intelligence valuations. Those declines reflected the tension between investor excitement about artificial intelligence's future and their anxieties about whether the industry's surging valuations could be justified. That is why the analyst's upbeat tone seemed to resonate so strongly. His optimism drew heavily from Palantir Technologies' impressive operational performance. The company's revenue during the third quarter climbed 63% year over year, an acceleration that exceeded many expectations. A particularly striking detail was the 121% jump in United States commercial revenue, which demonstrated that the company's artificial intelligence platform has been rapidly gaining traction among private sector clients who are racing to adopt advanced analytical and decision-making tools. That surge in demand created a ripple effect that strengthened confidence in the company's growth runway, prompting leadership to raise revenue expectations for both the upcoming fourth quarter and the full year. Even with such strong operational data behind it, Palantir Technologies remains unusually volatile. Over the last 12 months, it has logged 47 separate trading days where the stock moved more than 5% in either direction. That kind of turbulence can intimidate new investors, but it also means that the stock frequently reacts sharply to analyst commentary, macroeconomic developments, or sector-wide shifts in sentiment. Today's climb reflected the market's appreciation for the analyst's long-term thesis, while also showing that investors did not treat the news as something capable of completely reshaping their underlying thesis about the company's risk profile or its complex competitive landscape. Instead, the reaction landed somewhere between enthusiasm and cautious acceptance. To provide a sense of continuity, the most recent major move before today happened 8 days ago. During that session, Palantir Technologies leapt 6.5% as excitement over Alphabet reignited broader enthusiasm for artificial intelligence-focused stocks. That surge occurred just as the market was building momentum heading into the Thanksgiving holiday, creating a fertile environment for growth-oriented technology names. The Nasdaq index rose 2.6% that day, while the Standard & Poor's 500 gained 1.6%, fueled in part by a 5% jump in Alphabet following the unveiling of its upgraded Gemini 3 artificial intelligence model. That breakthrough captured the market's imagination and radiated outward to other major technology companies, lifting the share prices of Broadcom, Micron, and Palantir Technologies. This uptick did not occur in a vacuum. It came immediately after comments from the president of the New York Federal Reserve hinted at the possibility of a December interest rate cut. Lower rates would reduce financing costs and typically act as rocket fuel for high-growth technology firms that rely heavily on forward-looking valuations. Investors viewed the combination of improved macroeconomic conditions and renewed excitement around artificial intelligence as a compelling setup for companies deeply embedded in the digital transformation wave, especially those holding a distinctive competitive niche. Fast forward to the present, and Palantir Technologies has climbed an impressive 129% since the start of the year. Despite this dramatic ascent, the company's current share price of $172.02 still sits 17% below its 52-week peak of $207.18, which it reached on November 25th. That gap between the current price and the recent high hints at the company's history of sharp fluctuations, reminding investors that even strong long-term performers can experience meaningful short-term corrections as sentiment shifts. For long-term shareholders, the journey has been particularly rewarding. An investor who purchased $1,000 worth of Palantir Technologies would now be looking at an investment worth $7,640. That transformation illustrates the company's ability to compound value even amidst periods of volatility, uncertainty, and rapid market evolution. It also underscores why analysts like Ives continue to see a vast amount of untapped potential tied to Palantir Technologies' role in shaping how artificial intelligence, data analysis, and automated decision-making become woven into the operational fabric of governments and corporations alike. Artificial intelligence is accelerating faster than most people realize, and companies positioned at the intersection of data, analytics, and algorithmic intelligence are likely to become some of the most influential forces in the global economy. Palantir Technologies has already demonstrated an ability to capture that momentum, and analysts suggesting a $1 trillion destination are essentially arguing that the company could become a core pillar of the artificial intelligence infrastructure that powers both commercial enterprises and governmental institutions. We are still early in the artificial intelligence era, and companies with the right technological foundation may have growth pathways far longer than traditional valuation frameworks currently assume. Investors looking for an opportunity to buy the dip on Palantir Technologies may see the recent pullback as an opening, especially since analyst Dan Ives expressed powerful confidence in the company's long-term trajectory and even suggested that Palantir Technologies could reach a $1 trillion valuation within the next 2 to 3 years thanks to its growing dominance in enterprise artificial intelligence. Despite the stock falling nearly 20% last month due to broader fears over stretched artificial intelligence valuations, the company's fundamentals remain exceptionally strong, highlighted by third-quarter revenue climbing 63% year-over-year and United States commercial revenue soaring 121% on the strength of its artificial intelligence platform. The company also raised its expectations for both the fourth quarter and the full year, signaling that leadership anticipates continued momentum. With the stock having risen 129% since the start of the year, yet still trading 17% below its 52-week high, dip buyers may view the current price as a discounted entry into a business that has strengthened its competitive position and is increasingly recognized as a central force in the artificial intelligence revolution. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.